Mastercard, cryptocurrencies and CBDCs are the future of money. Mastercard noted that adoption rates for emerging payment options such as cryptocurrencies have historically been higher in Asia. Consumers in Thailand and India are more accustomed to using cryptocurrencies than those in a highly developed market such as Australia. With nearly every central bank exploring or testing CBDC, Mastercard remains optimistic about its widespread adoption sooner rather than later. Whatever your position on cryptocurrencies, the fact remains that these digital assets are gradually establishing a foothold in the world of payments. Simply put, cash will not always reign supreme, and that is a belief shared by Mastercard, a global payments leader. Indeed, Mastercard has begun offering its customers access to cryptocurrency-linked debit, credit, and digital wallets, as well as loyalty rewards programs powered by cryptocurrency. Earlier this month, the multinational financial services corporation based in the United States partnered with 3 leading cryptocurrency service providers in Asia-Pacific to launch the region's first crypto-funded Mastercard payment cards. The digital asset service providers, Hong Kong's Amber Group, Bitcub in Thailand, and Coinjar in Australia, have all begun accepting applications for crypto-linked Mastercard credit, debit, or prepaid cards in their respective markets within the region. They will then be able to instantly convert their cryptocurrencies to traditional fiat currency using these cards. In an interview with TechWire Asia, TWA, Rama Sridhar, Executive Vice President, Digital and Emerging Partnerships and New Payment Flows, Mastercard Asia Pacific, discussed the company's strategy in the digital asset space, focusing on cryptocurrencies and central bank digital currencies, CBDCs. Mastercard was the first to enter the Western market with cryptocurrency products and services. How has acceptance been so far, and how do you anticipate it will be in the Asia-Pacific markets? Globally, the Asian region has always had a higher rate of adoption of emerging payment options. There are, however, a few reasons why Asia is the world leader in this regard. To begin, according to Mastercard's New Payments Index, 94% of consumers in the Asia-Pacific region are considering using emerging payment methods this year. According to Mastercard, emerging payment methods include QR codes, digital wallets, buy now pay later, BNPL, transactions, cryptocurrencies, and biometric authentication. Having said that, the desire and enthusiasm for adopting a new payment method is extremely strong in this part of the world. The second factor is a sizable Asian population that operates completely cross-border, whether through online purchases or physical travel. As a result, expectations for a more global, seamless, and interoperable framework are higher in Asia than in the majority of developed Western economies. Right. Which country in the Asia-Pacific region does Mastercard consider to be the most cryptocurrency accepting? In comparison to a highly developed market like Australia, there are more consumers in Thailand and India who are very comfortable using cryptocurrencies. Even Vietnam and Indonesia are growing at double-digit rates at the moment, which bodes well for emerging payment methods. This in and of itself speaks volumes about Asia's developing economies, where the cash runway is extremely long. Not to mention the fact that, according to the United Nations, over 60% of the world's youth live in Asia-Pacific, totaling over 750 million young women and men aged 15 to 24 years. Now, as cryptocurrency matures over the next 3 to 4 years, many of these play people will be adults or will have begun their careers. In summary, Asia-Pacific is demographically primed for higher adoption rates, which is probably the most accurate assessment. As nearly 30% of the global value of crypto transactions occurs in Asia, the region is destined to be the global leader when it comes to the future of money. what was the tipping point at which Mastercard decided to incorporate cryptocurrencies into its payment network? Mastercard's position on cryptocurrencies is fairly straightforward. It is a matter of choice. We are not recommending that you begin using cryptocurrencies. However, we are here to enable customers, merchants, and businesses to move digital value in any way they choose, traditional or crypto. It should be your decision. After all, it is your money. Within the Mastercard network, we observed a significant increase in the number of people using cards to purchase crypto assets, particularly during Bitcoin's recent price surge. Additionally, we are seeing an increase in users using crypto cards to gain access to these assets and convert them to traditional currencies for spending. Above all, we have been and will continue to be extremely selective about the assets we support, guided by our digital currency principles, which prioritize consumer protection and compliance. Currently, we have partnerships with over 30 crypto card programs, and to be clear, not all of today's cryptocurrencies are supported on our network and will be in the future. However, stablecoins, which are backed by a basket of fiat currencies or a single fiat currency, are gaining significant acceptance. To top it off, stablecoins are more regulated and reliable than they have been in the recent past, and it is these very stable coins that we intend to integrate into our network. Tell us more about your thoughts on CBDC and the safe space that Mastercard provides for governments and private sector banks to work out how they work. We announced this proprietary testing platform for central banks last year. It essentially allows central banks to engage in a simulated environment where they can issue currency and distribute it among banks, financial institutions, and consumers in order to fathom how it would work in the real world. This will enable banks to identify and strategize the optimal regulatory environment in which to launch central bank digital currencies, CBDCs. To be honest, almost every central bank is investigating CBDC today, not because they want to issue it immediately, but because it is proving to be a necessary component of the ecosystem. With that in mind, developing the framework, the rules, and determining the most effective method is simply a matter of time. And for Mastercard, anything the central bank does on a principled basis will automatically be assumed. That is how our collaborations progress. Central banks in all developing economies, and particularly in Asia, are focusing their efforts on going cashless. As a result, many central bankers believe that CBDCs have the potential to significantly increase the number of people who use the digital financial system. Transparency is the other real issue on central banks' agendas. As a result, all governments and regulators are moving in this direction. Yes, this is not the only way to do it, but it is a good way to do it because it enables rapid access to currency for populations where physical cash circulation is restricted. Do you believe that a CBDC future will arrive sooner rather than later? CBDCs are the way forwards to facilitate digital transformation, financial and digital inclusion, and the elimination of cash. Will it occur within the next 2 or 5 years? Unfortunately, I cannot predict, but I believe that a great deal of framework and work is required. Without a doubt, there will be numerous debates between central banks about the virtues and demerits of how things should be managed. They will need to ensure that other established payment ecosystems coexist peacefully with CBDCs. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.